Learners and teachers from the Western Cape, and welcome to the second Grade 12 Telematics presentation. I want you to sit back, to relax, kick off your shoes and untie your hair, because I'm going to take you through a journey of investment securities. My co-pilot today is a colleague of mine, Chantal Stein. Chantal, good afternoon.
Good afternoon, Mr. Lambert.
And welcome back again.
Thank you.
Good to have you, Chantal, and for you to share your experiences with us. Learners, teachers, wherever you are tuned in, please let us know we are tuned in, and we will certainly acknowledge your presence here today. Chantal, investment securities is one of our topics under the main topic, business ventures.
That's correct.
It's important that learners must study all those topics under business ventures together.
Yeah.
Can we just briefly recall what are the other topics that's part of business ventures with investment securities? Remember, there are 5.
Yes.
So it's management and leadership.
Yes.
We've got investment securities.
That's correct.
And then we've got his cousin, investment insurance.
I thought it was his brother. Okay, his cousin, investment insurance.
Investment insurance. And then we've got the neighbor, forms of ownership.
Yes, of course.
And then we've got the...
presentation of information.
Okay, that is the 5th one, presentation of information. And then we're going to go through investment securities today with you. Chantal, important, what must the learner know about investment securities?
Okay, Lisa, very important to know functions of the JSE, and we'll speak about it a bit later. The different investment opportunities, government RSA retail savings bonds.
Yeah, I see you've got the functions of the JSE.
Yes.
Listed again, eh?
Yeah.
Do you perhaps know something that we don't know? Is that an important question?
It's very important.
For the trial exams?
For the trial exam, for every exam, for your November exam, it is very important to know the functions of the JSE, because the JSE plays a very important role when it comes to investments, especially in public companies.
Okay, cool. And you're going to show the learners a simple method of remembering those functions.
Yes.
Okay, that's good. Anything else I need to know?
They need to explain the meaning of debentures, dividends, capital gain, simple interest and compound interest. They also need to discuss the factors that must be considered when making investment decisions. Yeah,
and in important omission there, Chantal, is those calculations of simple interest and compound interest.
Of course.
And we're going to spend quite a lot of time just showing learners some shortcuts. There we go. That was on the next slide.
The difference between simple and compound interest, as mentioned, you are going to be expected, grade 12, to do calculations based on scenarios, and also recommend types of forms on investment based on the calculations.
And I think we've got a nice example of that kind of questions that they will get at the end of the year.
Yeah.
Cool. Chantal, now, the different kinds of questions. I think learners... in the question paper, you'll find throughout the question paper different levels of questioning, and it's so important, teachers, that you expose learners to these kind of questions. Learners, you will get higher order questions, you'll get middle order questions, and you'll also get lower order questions. And you'll find them mostly in past exam question papers. It's set out beautifully there. So if you can practice using past exam question papers, you will then expose yourself to the different kinds of questions. Chantal, the content map. This business investment securities, the learners were exposed to some of it in grade 10 and grade 11. Isn't that the case?
Yes, that's correct. So in grade 10, we focused on business opportunities. And when we got to grade 11, we focused on the business plan and also starting a business venture based on an action plan. That's where we did the Gantt chart and we did the action step chart. And now in grade 12, we're focusing on business investment opportunities. the risk associated with it as well.
Cool. Chantal, now this topic lends itself to the use of very specific terminology. And so it's extremely important, learners and teachers, that you know the meaning of these concepts. Can we just run through it quickly? When we talk about the term investment, what does that refer to?
Okay, so investing money is saving money, putting it away in a safe place. And obviously, we want more money than what we have invested. We want more money back.
Okay, so it's putting in an initial amount,
yes,
say 100,000, and after a couple of years, you want to get back more than 100,000.
Of course.
You want to get back to 120, and that extra 20 would be then your return on investment.
That's correct.
The JSE, Johannesburg Security Exchange, what is that used for?
Okay, so it's a formal market where we buy or we as investors can buy shares, trading in shares, and it compromises of all public companies that have been listed.
Yeah, that it consists
Consists.
of all
Comprises.
public. Yeah, it comprises
Sorry.
yes, of all public companies that have been listed. And how do we know a company is a public company? Normally, when you see the name, after the name it will be LTD.
Yes.
And that is your clue. It's a public company. How do we know it's a private company? When they have
PTY,
PTY,
LTD.
LTD. Now,
Sorry, Mr. Mom. Just before we go, and I've seen in question papers different questions that they will actually give you, like you say, it's a clue. So sometimes they will give you the business's name, and you must then make the link to the JSE.
and it is a public company.
Yeah,
Yeah.
and it's a public.
And that will deal with under forms of ownership, eh?
Yes.
The names of companies and the names of forms of ownership. A share. Now, it's not dissimilar to when I say I've got a share in that cake. If I contribute towards purchasing that cake. Can you just say in a nutshell, what is a share?
So a share, it gives investors the opportunity to obtain part ownership of a company.
Okay, so a company will be established and they will distribute 2 million shares to the public.
Right?
And if you buy 100 shares, then you are part ownership of that company. Cool. Capital market.
Okay, so the capital market, it is a market for securities or shares where companies and the government can raise long-term funds.
That raise long-term funds simply means they can borrow money on the long term.
Yes.
Then they don't go to the bank, but they go to the capital market.
Okay. Right, short-term investment, an investment for a period shorter than 1 year.
Okay, short term, 12 months and less.
12 months and less. And then we have long-term investment, an investment for a period for longer than 1 year. And that's 12 months or more.
12 months or more.
Yeah.
Fixed rate.
Fixed rate, the rate of return that stays the same for a period of time. So we know for 2 years, we will get interest of, let's say, 5% or 10%. It doesn't change.
Okay, so when we talk about the rate of return, we are talking about the interest rate
Yes.
remaining the same. I think it's worthwhile mentioning that normally the interest rate is coupled to the repo rate.
Yes.
Now, the repo rate is determined by the Reserve Bank, and every second month, the Monetary Policy Committee, they sit and they then determine what the repo rate is going to be.
Yeah.
And so if the repo rate decreases, then the interest rate that are not fixed will also decrease.
Yeah.
And so there's quite a few advantages attached to having a fixed interest rate. The converse is also true, however. If the repo rate goes up, the other interest rate also goes up,
yeah.
but the fixed interest rate will remain the same. And then you will lose out as an investor.
So that's why it's good we're going to come to those factors where we have to decide on what type of investment we're going to take.
Is that the question? Factors that must be considered when making an investment.
Yes.
And interest rate will be one of them.
Interest rate will be one of them.
Simple interest. What is that?
Before simple interest accumulated, the interest
My apology for that.
Interest earned over investment period. So accumulated, it builds up, it adds on. And then we have simple interest, which is calculated on the original or principal amount invested.
Okay, and we're going to come to that with the calculations, eh?
Yes, we will.
Compound interest?
Calculated each period on the original or principal amount, including the interest accumulated during past periods. So it's interest upon interest.
Interest calculated on principal amount plus interest.
Yes.
Okay, cool. And what would the risk refer to, the term risk?
So risk refers to the chance that the invested amount may reduce in value or loss in total over a period of time due to unforeseen circumstances.
Learners, that was just a brief rundown of some of the terminology. Now, I know all of you may not have the resource booklet, the telematics resource booklet. It's been issued to schools in the Western Cape that are part of this project. However, if you don't have a booklet, please do not try and write down what is on the screen. I will put the resource booklet on our website, and I'll give you our website at the end of the session. And then I'll also make this PowerPoint presentation available on the website just for you. So please don't write down what's on the screen. Let your teacher send me his or her email address, and I will then make sure that I either forward a copy of this resource booklet, and I'll also send the link to our e-portal where they can access the resource booklet. Chantal, yeah, we encourage learners and teachers to let us know where they are tuned in. And the first message we got is from Naletsane School in Tambazimbi, all the way in Limpopo. Wow. And so we say to the learners and the teachers of that school, a warm, warm welcome. We've got another school here. Hello, I am Sisazu Unutandu from JA, and he says he's clever. And then we've got 12E5 of Kensington. They are tuned in and they say they love you, Ms. Stein. Is that your class?
No, it was my class.
And then there's a shout out for Mrs. van der Merwe from Maclear High School. I'm not sure where that is. Could be in the Eastern Cape. And then, Abigail Demas from Crestway. She and her learners are also tuned in, and they say they are enjoying this session tremendously. Isamayetu Secondary, their learners are also tuned in. And there are quite a few learners and teachers letting up Bridgetown High School, their grade 12A, is also tuned in. And we say welcome and thank you to you for being part of this presentation. Chantal, we've got to move on. You mentioned the functions of the JSE.
Yes.
Very popular question.
Very popular.
That's what we call low-hanging fruit. 12 marks. Learners, please make sure that you remember these, at least 6 of these functions. Chantal, let's just go to the first one quickly. This first one speaks about, it's a link between the investor and the public companies. How does that happen?
So, let's say I want to invest in a public company. I would then go online. I would buy my shares online in whichever company I want to invest in. So the JSE is then this middleman between me, that's the investor, and the public company I want to invest in. I cannot go to the business and knock on the door and say, good afternoon, I want to buy some shares. Yeah. I have to go via the JSE, and I have to also buy via stockbroker. And
so conversely, the public company would then make their shares available on the JSE, and the public will then have access to that shares, and they can buy it. And so it acts as a link.
Yeah.
The second one. It regulates the market for dealing with shares. It regulates the market for dealing with shares. I think we spoke about that now,
yeah.
Where the JSE acts as the link. So whenever their shares are made available, people go to the JSE via stockbroker and they will buy. Yeah. And whenever you want to sell, you then sell on the JSE, and then you brings it into contact with somebody else who may want to buy the shares that you've got. But you can't do it individually. You've got to work via the JSE.
Yes.
Chantal, this one. Shares are valued and assessed by experts. So it simply means that the market value of the share is a true reflection of the value of that actual share. And the reason why you buy shares sometimes, not just to get ownership, but to get dividends.
Yeah.
So you actually want dividends, and you also want the value of that share to appreciate. So if you buy a share for 10 Rand, in 2 years' time you would want to sell it for 15 Rand.
Yeah.
But it's a risk
It's a big risk.
because it depends on market conditions, right?
But what's so cool about shares is that you can track its
Performance
daily
on a daily basis. Yeah.
And when you go and you open the newspaper or you check online, the shares prices are published daily.
It takes up a lot of space in the newspaper. And I often wonder how many people read it, but they're actually compelled to publish it daily in the newspapers, on television. You see it all over the shop. Chantal, this one, financial institutions invest surplus funds. Now, these financial institutions, to simplify it, let's just talk about banks. When they get money or deposits from the public, they will take that money, but they're not going to put it in the safe. They're going to lend it out to the people who needs to make loans. But when they lend it out, they will charge a certain interest rate, which is less than the interest rate that they're going to pay the people in order for them to make some kind of a profit. But it often happens that they don't lend out all that money that comes in via the public. Now, that is the surplus funds that they talk about.
Okay.
That's invested in the JSE or on the JSE in public companies. Okay. The next one, it's a barometer of economic conditions. Simply means that if the activities on the JSE is high and people are buying like there's no tomorrow, it simply means the economy is good. And that's why we say we can measure the health of the economy of a country by looking at the activities on the Johannesburg Stock Exchange. When activities are slow and low and people are not buying, then we say the economy is not in a good state. And then this one, you just spoke about this one now, that keep investors informed of share prices. And that is via the newspaper's daily publication. I like this one. Can you just read that one for us quickly?
Small investors take part in the economy of the country. So it means also that anybody, you and I, the normal man on the street, we can invest in public companies. Even if we have 1 rand, you can buy a share in a company for 1 rand. That's the beauty of that small investors. Okay. Just the risk of investing in shares. That 3-4 years ago, we had Steinhoff. On the 4th of December, the value of their shares were 96 Rand a share. The next day, the value of that share dropped dramatically to 10 Rand a share until it went to, within that week, 5 Rand a share, 2 Rand a share. And so it's a risky business when you do invest in shares. But also it can be a very profitable business. And it's important that you consult experts when you do want to make investment in shares. So we would say then that the risk involved, or the risk tied with shares, is very high risk. High risk and high returns also. If you look at the share of Naspers, I think Naspers is going for more than 3,000 Rand a share. Sure. And you could have bought it maybe 10, 15 years ago for 100 Rand. Wow. Massive dividends or return on investment in that case. So learners, functions of the JSE, make it the NB. Teachers, please make sure that learners are assessed on it during the control test and trial exams, because it's quite an important question. Chantal, it's all about money. And so if you want to make money, you need to have investment opportunities. What are the different investment opportunities that are available to the general public? Okay, so if we want to invest or anybody wants to invest, there's RSA retail savings bonds, there's unit trusts, shares, we have fixed deposits, there are debentures, fixed property, mutual funds or stokvels, venture capital, endowment policies, retirement annuities, call deposits, as well as managed portfolios.
Okay, so those are the different, and we're going to look at each one of them individually. What's your favorites?
I would say my favorite is RSA retail savings bond.
So learners, please make sure that you know this one thoroughly.
Yeah.
Is that your favorite?
That's my favorite because I've learned so much about it from a YouTube video. And just a bit later, we will be sharing a slide with you that I'd like you, grade 12, to take a picture of. And then also, if you can go and find those videos on YouTube. But I think the one I like most is the one on RSA retail savings bonds. Because in this video, they don't give, or they give more information than what the textbook gives.
Yeah. It's important. This one is made available by the government, eh?
Yes, National Treasury.
Okay, National Treasury, government via National Treasury.
Yeah.
And one of the advantages of investing in the RSA retail savings bonds is that your returns is actually guaranteed.
Yes, and it's low risk.
It's low risk because it's guaranteed, and that's why the interest rate is not that high. Eh?
Yeah.
And also the minimum amount that you need to invest is 1,000 Rand.
With a maximum of 5 million. I didn't know that.
Okay, but I've got only 4 million. So I'm still safe to invest. Linus, yeah, we're going to look at each one of them. Fixed property. It's quite a good investment.
Yes.
Provided you buy in the right location.
Yeah.
Because if you buy in the wrong location and some development happens around your property, then the value of your house will decrease, eh?
Yes. Or it makes it more difficult to sell.
To make it, yes, absolutely. Okay, so Chantal, you want to speak about those YouTube links that you've got? Do you want to learn us to take a picture of those screen?
Yes, we're just going to keep the screen there for a minute, for us 5 seconds. And I'd like you please to take a picture of those links. And if you can, please go and watch those videos. It's very informative. And like I said, it gives you more than the textbook, than what the textbook gives us.
Absolutely.
Yeah.
And just for consolidation purposes also.
And originality.
You can, absolutely. And you can look at it over and over and over. Yeah. Okay, we'll come back to that slide again later on. Earlier we noted that Limpopo, the learners from Limpopo is watching, but here is from, Eastern Cape Business Studies learner and the teacher. Is it from Umslawilanga? Yes, I'm sure I said that correctly. And they say they're enjoying it. Yes, learners asking for a copy of the resources, and I indicated that I'm going to send it later. Here's a question. May you please tell us more about stokvels and its advantages, please? Yeah, let's talk about stokvels quickly. Do we have a special slide on that? Yeah, right on top.
Yeah.
Let's talk about stokvels. Now, stokvels is unique South African.
Yes.
Proudly South African.
Proudly South African, and that's why it's also very good to watch that that link that we shared. It happens in the townships. Yeah. That's what we saw on the video that we watched, my class and I. 12v3, just so by the way.
Can I just say that in the formal terminology, we talk about the unbanked population.
Oh, okay.
The unbanked population, those people that doesn't trust the banks.
Yeah.
And they say, no, we don't trust you. Let's come together informally.
Yeah.
Let's pool our resources together, and then and we divide whatever we have at the end of the year. So just speak to us about it.
Yeah. And so a stokvel is an informal savings scheme to which a relatively small group of people contribute. It is usually managed by a trustworthy chairman or treasurer who will be responsible for keeping records and managing the bank account.
So what they do is that instead of individuals going to the bank, they pull the money together, and then remember, you'll get more. The more you invest the higher the interest. So it's
Yeah.
actually a novel way of increasing the amount of your investment or the returns that you get
Yes.
by putting them. But also important that if they need to borrow money, they can borrow it from
On
the stock
file. Yes.
and because the people know you, you will then 10 to 1 get that money that you want to borrow. Whereas if they need to go to the bank and they don't have security, it's very difficult for the banks to grant those loans.
Yes. And that's, I think, what we saw when we watched that video. And it said that many people that were struggling during the month, they didn't go to the bank. They actually went to borrow from the stokvel
From the
to
stokvel,
get through
yeah.
the month.
Yeah,
So
absolutely.
the money is easily accessible and flexible, I would say.
And the idea should actually be that the money you get shouldn't be for your running expenses. Should actually be to create additional business and create additional income for yourself. And then you can pay the stokvel back their money.
Yeah. What we also saw was that the stokvel would now, the money that they got together, they would also grant like home loans now to
Yeah.
their people.
Wow.
So it would be, they don't need to pay that 20 years back, and they don't need to pay the interest that's charged by banks.
Yeah.
Yeah.
Okay, that is cool. So there's quite a few advantages attached to stokvels.
Yeah.
Chantal, the 32-day notice account, how does that differ from a fixed deposit?
Okay, so money is invested at a fixed rate, although the withdrawals may be made, provided the bank is given 32 days notice of the withdrawal.
Yeah, Chantal, thank you. I just got a question here from Jojo Senior Secondary School in Mount Aleph. They say, please tell us more about stokvel and which one is more safer, the RSA retail saving bond and unit trust. What a brilliant question. Which one is more safer, RSA retail saving bond or unit trust? Now, I think before you ask that question, we refer to RSA retail saving bonds, but maybe one of the learners can tell us which one is the safer option, the RSA retail bond or the unit trust. Let's see who can give us that answer, and then we will then confirm the correctness of that answer. Kendall, risk factors. With any kind of investment, there are certain risks attached. Can it be a high risk or a low risk? Let's just go through that quickly.
Okay.
The RSA retail savings bonds, in terms of risk, what do we say?
Okay, in terms of risk, RSA retail savings bond, the risk is very low.
Okay. Why is it low?
Because it's safe and it's guaranteed. No matter what happens, you'll get your money back, provided there's a war. So it's a safe investment. It cannot be sold on the open market.
Okay, so it's only the government that will then pay you back.
Yeah.
If you want to sell it, you must sell it back to the government.
Yes.
Okay, and it's safe and it's a low risk, and so the interest rate is then also very low. Fixed deposit.
Same with a fixed deposit. You're putting away your money at a fixed rate, so it's very low. The risk is very low, as the investor will receive what is agreed to. The interest rate is usually fixed. The return will not be affected by market fluctuations.
Okay, so fixed rate, the risk is very low.
Very low.
Very low simply means that you'll get your money back. Unless the bank goes busted and it gets liquidated. Like the other bank they had, the VBS.
Yeah.
Oh, that was a tragedy. Eh?
Yeah.
It was really, really sad the way the money of poor rural people was stolen from that bank. And so they obviously, those people, depending on how much money they can get back, those people will not get all their money back. Important that you invest in a solid bank, a bank that has got a track record, so that when we say the risk is low, we simply mean that you will get your money back.
Yeah.
May not get a lot of interest, but your money will get back. Debentures. What is a debenture? Oh, a debenture is simply a instrument that's used by businesses to obtain long-term funding. So if I need funding, I'll go to a business and that business can offer me a debenture of 2 million and I'll pay them back after 10 years.
Okay.
The question is the risk factor.
So the risk with the debentures, they have a very low risk as they must be paid back.
They are what we call preferred creditors.
Okay.
So if a business made money available via a debenture and that business, the other business who took on the loan goes bankrupt, then whatever money gets left over goes to the debenture holder. Low risk. They will get their money back. Okay, so those were some of the investment opportunities and the risks associated with each one of them. Chantal, yeah, the SMSs is coming in fast and furious. Remember, we asked that question, which one is safer? And then we had an answer here from 5629. And 5629 is James Arthur. And he's eating business studies now with my classmates. I'm glad you've got, and he's from Craddock. And he said the RSA government retail bonds are the safest, and you are 100% correct. It's safe. It is the safest because you will get your money back. Thank you for that, Arthur, and we hope you're enjoying your eating business during the course of the afternoon. Chantal, we get different types of shares. Do you want to run through those different types of shares for us quickly?
Okay, so we have shares, different types of shares. We've got ordinary shares, and that's standard shares with no special rights or restrictions. We also have preference shares, and these shares enjoy preferred claim on the company's assets in the event of bankruptcy or liquidation. We have founder shares, shares that belong to the shareholders who started the company, and then we also have bonus shares. Shares that are issued to the existing shareholders as compensation for loss of dividends.
Okay, so just to recap, Chantal, there are 4 types of shares. The first one is an ordinary share.
Yes.
No special rights, no special treatment. And the risk you take is your own risk. Then we've got preference shares. There we say that they enjoy preferential claims in the event of the business going bankrupt.
Yeah.
But it's not only that, they also get preference in terms of dividends. So we'll first sort out the preferential shareholders in terms of dividends, and then the ordinary shareholders can get the crumbs. Learners often struggle with founder shares. Now, the founder shares, Chantal, as you indicated, are shares that belong to shareholders who started the company. And then the bonus shares, that is issued to shareholders in the event of the company not declaring any dividends over a long period of time. And so you get a bigger share of the company as you wait for the company to become profitable. Again, learners, you must know the different types of shares. Stainville High says they are in class and they are enjoying the session. And then there's Abumbo Agricultural High learners. They are also enjoying the session. And Zintle Kona says she's watching it and she's also enjoying it. Learners, let it come in. Let us know where you are from and we will acknowledge this. 1 or 2 asking for the resources. I indicated I'll put it on the website. Send me your email address and I will then also forward that to you. Chantal, a popular question. Teachers, please revise this with your learners. The difference between an ordinary share and a preference share. Chantal, just take us through it. But when they ask the difference, it's important that the difference must correlate.
Yeah.
Just go through that quickly.
Okay, so before we just go through the differences, we're looking at the difference in the shares. So, for instance, in the first bullet, we're looking at the difference in dividends. So, for ordinary shares, they only receive the dividends when profit is made. But with preference shares, they receive the dividends regardless of the profit made. So that's where it comes to the preferential treatment, if I could call it that.
Okay, yeah.
Okay.
But you can also say here under dividends that preferential shareholders, they get the dividend before ordinary shareholders.
Yeah.
Ordinary shareholders must stand behind them.
Yeah. They lost in line.
They lost in line. They need to stand with their hands outstretched out, hoping that there's still dividends left over after the preferential shareholders has been given their shares. And later on, we're going to look at the different types of preferential shareholders, right?
Yes.
Okay, number 2. So you said the first difference relates to dividends.
Dividends.
And so learners, it's important that you, when you speak about dividends under the ordinary shareholders, you also need to speak about dividends under the preference shareholders. Okay, number 2.
Number 2, they're looking at return on investment. What is the difference? So normally, the higher the profit for ordinary shareholders, the higher the dividends. For preference shareholders, the fixed rate of return is paid on these type of shares. So no matter what, they get the same dividend because it is fixed.
Okay, so instead of saying no matter what, we can say irrespective of how much profit is made. They will still get a dividend if they are a preferential shareholder. However, sometimes the preferential shareholders do not get a dividend in the 1 year. But in the next year, they will then get that and what they should get the next year.
I see.
Whereas the ordinary shareholders, if they didn't get it in year 1, they can't claim it in year 2.
There's no catch-up.
Now, there's no catch-up.
Yeah.
I like that. There's no catch-up. I almost said the other word, but I won't say it now. The third difference.
Okay, the third difference, they look at bankruptcy. So shareholders are last to be paid if the company is declared bankrupt. That's for ordinary shareholders. Preference shareholders, on the other hand, they have preferred claim on the company's assets in the event of bankruptcy.
Okay, cool. And learners, those 3 differences, that's all you need to know. You don't need any other notes, and that if it's asked as a question like that in the exams, it's 12 marks for Mahala. Now we've spoken about preference shareholders. The term indicates that they are ahead of your ordinary shareholders. They've got certain rights that the ordinary shareholders doesn't have. So what are their rights? Chantal, just take us through that.
Okay, so they receive dividends, as we already heard, regardless of how much profit is made. They have voting rights at the AGM. They have a fixed rate of dividend. They enjoy preferential rights to dividends. Preferred claim on company assets in the event of bankruptcy or liquidation, what we already saw. And then also they receive interim and annual reports.
Yes, okay, Chantal. So just go through the rights of the preference shareholders again. Number 1,
they receive dividends regardless of how much profit is made.
Okay, and we also said that if no profit is made and no dividend is declared for that particular year, then their dividend accumulates.
Okay.
And they'll get it the next year with the next year's dividend. They have voting rights at AGM, not for all voting decisions or decisions that needs to be made. Only decisions that affect them as preference shareholders. So they may not have a right to, for example, to determine the remuneration of directors, because it doesn't affect them directly.
I see.
They may not have the voting right to determine who the directors are going to be, because it doesn't affect them directly. Only matters that affects them directly. At the AGM, will they have voting rights? And you already indicated so many times they received a fixed rate of dividend. So it's actually a low risk for them, eh? enjoy preferential rights to dividends and preferential before anybody else.
Yeah.
And that anybody else is the ordinary shareholder. They've got a preferred claim on the company's assets in the event of bankruptcy. And they do receive interim and annual reports.
Does that mean that ordinary shareholders don't receive it?
If they go to the AGM, I'm sure they will get those reports. But special effort is made to make sure that your preferential shareholders, they get their interim and annual reports. It's important for them to get it, because if they didn't get a dividend declared this year, and next year they want to know how much was made and how much do we need to get. And so they need to know what is the position of the company throughout the process. And the company can't say, but now we're not declaring a profit, but we're not declaring a dividend, but we made a profit. And so they need those documents to interrogate it and determine, I didn't get my money, I wonder why. Let's go through those documents.
Okay.
Let's send it to my accountant or my tax practitioner or whoever that can guide me on that. So those documents are important for them.
Yeah.
The ordinary shareholders, it's important for them also, but remember, no dividend. They can't claim back any outstanding dividends. Chantal, Dylan McKenzie. Where is Dylan McKenzie? Dylan McKenzie is from Tafelsig High School, and he says, how do you become a preference shareholder? They actually make it available to the public or to the general public under certain conditions. They make it available to people that are connected under certain conditions. And so I can already see Dylan's mind is working. I'm going to get ordinary shareholders. Wait,
Yeah.
you stand at the back. I'm going to make sure that I become a preferential shareholder. Dylan, brilliant question.
I think you, Lester, sound like a preferential shareholder, like a preference shareholder.
I plead is it the Fifth
Amendment.
The Fifth Amendment. Okay, here's a question. Please complete it. Please repeat. Oh, what did I say? Please repeat the difference between preference and ordinary shareholders. We'll make it available to you. It's in the booklet. We've got quite a couple of slides to just talk about it. And so the differences will be indicated to you. Chantal, yeah, I mean, we said we're going to take learners throughout the journey of investment and securities, and we've been talking about concepts all the time. And these are important concepts that learners must know.
Yes. And I think we've touched on most of them already. Dividends, debentures, compound interest, simple interest, and capital gain.
And the capital gain one we didn't touch on. Maybe you just want to talk about that one?
Okay, so capital gain, the return on property or fixed assets or investments.
Over a period of time.
Over a period of time.
And let's use an example. You bought a house for 2 million. In 5 years' time, you're going to sell that house for 5 million.
Yeah.
So you bought it for 2 million. You're going to sell it for 5 million. The difference between 5 million and 2 million, that is your capital gain.
Okay.
The 3 million. Now, that's important for the government to know that, because they want to tax you on that capital gain. I think the tax rate is 20%. But luckily, it's only when you sell a second house, a holiday home, not your first house.
Oh, I see.
And so there are certain conditions attached to that. Chantal, the difference between simple and compound interest. I think it's important that learners know that.
Okay, so simple interest and compound interest, when we're investing, and now we need to determine how much interest we are going to get, or there's two ways that we can invest our money. So when we decide on simple interest, it's calculated on the original or principal amount invested, whereas compound interest is calculated each period on the original or principal amount including all interest accumulated during the past periods. Okay, and then simple interest, it's accumulated interest from prior periods is not used in calculations for the following period. So it's simple and it's straightforward. Whereas accumulated interest from prior periods is used in calculations for the following period.
Okay. Chantal, I think the best is to use a illustration, use a scenario,
Yes.
and then show learners how we do the calculations. Even though they must know the difference, because it can easily be asked for 12 marks.
Yes.
Know those differences, but know how to do the calculation. Before we do that, Chantal, Nompukuku Combined School, they say they are enjoying the show. And we are glad you have baptized it a show instead of a presentation. There was one question. Can learners also write formulas as part of the marks when difference between simple interest and compound interest is asked? Learners, I would say don't write it there. Don't write your formulas when it comes to the difference. What a good question, eh?
It is a good
What a
question.
good question. But don't write the formulas. Stick to the narrative, the explanation there. And when it comes to the calculations, then you write your formulas. So let's look at a few calculations. Now, there's only two calculations I can ask you. It's either simple interest or the cousin compound interest. Very important, when you do the calculation, write out the formula, and then afterwards you just replace. And so for simple interest, the formula is interest equals P times R times T. The formula for simple interest is P times R times T, where we say that P is the principal amount, the original amount of the investment. The R is the percentage interest rate, and then the T is for the time period. So let's just look at an example quickly. Caleb and Riley, they both invested 100,000 at Wavecrest Bank on a fixed deposit of 8.5% for 2 years. Caleb invested at the simple interest and Riley invested at the compound interest. So let's see quickly. What's the questions? Calculate the interest amount Caleb will receive after 2 years. Calculate the interest Riley will receive after 2 years. And then identify the better investment option and motivate your answer. And then they ask a fourth question. Calculate the interest amount that Riley will receive if interest is compounded half yearly. So let's just go back to the scenario. First, we're going to calculate Caleb. And we know Caleb opted for simple interest. First thing you write is the formula. Interest is P times R times T. Simple. Now for that you will get 1 mark if you write that down in the exams. Then you need to substitute. What is the principal amount? The principal amount is the 100,000 times. What is the interest rate? The interest rate is 8.5%. Now, how do we write that? We write it 8.5 over 100. And the time is 2 years. All you did was you substituted. And now to assist you, you can write down another line, 100,000 times 8.4, 100 goes into 8.4, 0.085 times 2. And now my friend Chantal is going to punch in the totals in her calculator.
Not mine, Amber's. Thank you, Amber, for borrowing it to your teacher. So we simply say 100,000 multiplied by 0.085 multiplied by 2. And that would give us...
And the answer is 17,000. And so there you get your 5 marks for that calculation. Okay, that's Caleb. Let's see, what did Riley? Riley did his calculation and he opted for the investment of compound interest. Okay, so important, what is the formula? It's again P, open your brackets, 1 plus R, close the brackets, to the power of N minus P. Simple formula for compound interest. P, open brackets, 1 plus R, close brackets, N minus P. Okay, so remember we want to calculate I. We've got P, they both invested 100,000. Open brackets, 1 plus, what was the interest rate? Interest rate was 0.085. For how long? For 2 years. Minus P. And Chantal is going to use a calculator to help us.
Okay, so it's 100,000. Open bracket, 1 plus 0.085. Close your bracket to the power of 2. Minus 100,000. Gives us a fraction. We're going to convert it.
Aha. Riley got, for the same period, Riley got 17,722. And so you can see the difference between what Riley got and what Caleb got. Caleb got 17,000, simple interest, and Riley got 17,722 Rand and 50 cents compound interest. So learners, why did Riley get more than Caleb? Because he opted for compound interest, and compound interest is interest on interest. Learners, unfortunately, we've come to the end of this session and there's still quite a few responses. I'm enjoying the show from It's So Nice, says Lufunu. And there's quite a few messages still coming in of learners expressing their gratitude. It's amazing that when you have fun, then time just flies. But you can see this topic is not difficult. It's very topical. We talk about it, we experience it daily, and the more you practice, the better you will perform. Please feel free to send me an email. My email address is ldmomberg@gmail.com. I'm going to put the resources on the ePortal and WCD ePortal.co.za, and you can access both the resources and the PowerPoint. Ms. Stein, thank you very much for making it so interesting this afternoon, and we enjoyed your input. You want last few words to the learners?
Learners, go well. All of the best to you. Study hard. Remember your teacher's a gift. Appreciate them. Until we see you next time for the examination prep for your trial exam.
Learners, just from Tandiwe, she said she enjoyed the session and she really looking forward to the next one. Till next time, goodbye.